NIO stock is the topic of today's presentation, and our NIO stock analysis is going to go into a lot more depth than you see in some of the other videos floating around out there on YouTube. So if you're a NIO stock investor, then you're going to want to watch this presentation. In order to better understand this company, I went to where they're headquartered in Shanghai, where I am now, and did some serious digging into their value proposition and the environment that they operate in. Thus, this is going to be a two-part video series that explores NIO. Now, NIO started out as a firm called Next EV, and they developed several prototype vehicles that started to attract attention to their brand. The one on the right here you can see is an autonomous electric vehicle concept car that they debuted around the time they raised $600 million from Baidu. And that wasn't too long after they debuted this beautiful vehicle that I saw yesterday in a showroom here in Shanghai. It's the EP9. When it was built, it was one of the world's fastest electric cars. So each of those wheels has a motor that generates 335 horsepower, about what a Camaro generates on all four of its wheels. It does 0 to 200 kilometers per hour, or 124 miles per hour, in about 7 seconds. It's the most expensive EV to build, at least it was at the time. It cost $1.2 million, and it sells for around $3.5 million. Now, NIO has taken in around $5.4 billion in funding so far from names like Lenovo, Baidu, Bailey Gifford, Tencent, and Sequoia. And there was a lot of hype that accompanied their U.S. listing in 2018. So they had their IPO, raised $1 billion, selling their shares at $6.26. You can see where they trade at today, $7.77 after hours, giving the company a market cap of $13 billion. Well, if we calculate our simple valuation ratio, it just takes market cap, divides it by annualized revenues, that's 1.4. You can compare that to Tesla at 5.5, or our catalog average of 6. And you would be led to believe that it's valued quite cheaply. Well, you need to remember that this trades as a variable interest entity, or a VI structure, and those typically command a risk discount. And if you want to understand why we don't invest in VI structures, you can read this piece. I'll link to it in the description of this video. It's called The Dangers of Chinese Stocks. And this is a decision that every investor needs to make. You can mitigate this risk by purchasing shares of Chinese tech companies abroad using different mechanisms. I happen to be a Hong Kong citizen, so my methods of investing in Chinese firms will differ from those who aren't. So that's one piece that you ought to read in anticipation of investing in Chinese tech firms like NIO. But then this second piece is also worth reading, and it's titled, "Is Searching for the Next Tesla Pointless?" It is, if you're evaluating all the SPACs and electric vehicle companies that have debuted in the United States. And we concluded in that piece, if there is a next Tesla, it speaks Chinese. And indeed, that's the case. There are a lot more electric vehicle players in China than you think. And in order to understand that environment, we put some boots on the ground to have a look around. And I think anything in China demands this. And you shouldn't come with an axe to grind. So there's a short report out by Grizzly Research where they came over and went around doing some investigations. I think, of course, being short, they're everything is a nail if you're a hammer. So they went around really finding all the problems that they could. But you also shouldn't go over as a bull and sugarcoat things. What you should always do is try to identify showstoppers up front, which is what we've done with VI structures. And provided you're willing to look past that, there's a very interesting company here in Shanghai that called NIO. So the environment in China is crazy, and I really didn't have a clue until I had revisited the place and learned just how fast their electric vehicle market has grown. So you see this excellent article by the New York Times. For China's auto market, electric isn't the future, it's the present. More electric cars were sold in China last year than in the rest of the world combined. So 22% of 2022 car sales in China were electric. So you go to the mall and you go down into the parking garage and you can distinguish between hybrids and electrics based on the color of plates. They have green plates while gas-burning vehicles have blue plates. That makes it very easy for them to provide certain benefits to electric vehicle owners that gas-powered vehicle owners may not enjoy. In the U.S., to put that number into perspective in terms of China's sales, in the U.S., EVs accounted for just 5% of new car sales in 2022. China passed that number in 2018. So roughly 80% of all electric vehicles sold in China in 2022 were made by domestic automakers. Remarkably, there are more than 300 Chinese companies manufacturing electric vehicles. You go around, walk around parking garages and parking lots, and you'll be amazed by all the different brands that you see, some being more common than others. In terms of charging these vehicles, China now has 4 million charging units. That's double from a year ago. Why is China dominating in electric vehicles? Well, Xi Jinping declared in 2014 that development of electric vehicles was the only way his country could transform from a big automobile country to an automobile power. And indeed they are. So his goal at that time was nearly a decade ago, was to have 20% electric vehicle sales by 2025. Well, they already blew past that last year. So Tesla, of course, is a success story here, and we're going to do a separate piece on that. But Tesla was allowed to open a Shanghai factory in 2018, and this is said to have been to spur domestic manufacturers. And they say Beijing allowed Tesla to become the first foreign automaker allowed to manufacture in China without a local partner for that reason, and the Shanghai government actually helped foot some of the factory building costs. Now, when it comes to the Chinese consumer, it's quite interesting that they're said to be weighing the features and prices of electric vehicles against gas-powered cars without much consideration of state support. So analysts say that now, here in China, it's all about the market taking over and subsidies have largely become irrelevant. So they give this example of this gentleman in Chengdu who says the cost of operating an electric vehicle can be less than a tenth of a gas-powered car, while traditional cars are being restricted on the road for certain days of the week to help reduce congestion and pollution. Electric vehicles aren't, and electric vehicles, for example, are allowed to park for free for the first 2 hours at public parking lots. Again, there are some incentives here that certainly are coming into play when the Chinese consumers decide what type of vehicles to buy, though they're said to be really focusing on total cost of ownership. So what types of vehicles are they buying? Well, it's very important to understand the competitive environment when you analyze NIO stock. So here are the top 10 electric vehicle models in 2022 that were sold in China. A couple things to note here. The top vehicle there that sells for $4,500 US. We'll talk about that in a second. To the left of that, the second most popular vehicle, BYD's Song, and that's a SUV type vehicle that might provide some competition to a certain extent for NIO, and then you see Tesla there in third place. Now, this most popular vehicle you can see here, the $4,500 four-seat hatchback, was also China's best-selling EV in 2021, and it's made by a joint venture of General Motors and Chinese automakers SAIC and Wuling. So when you look at the top 20 plug-in vehicles in China for January to November in 2020, you see there NIO's ES6. That's a popular vehicle that NIO sells, an SUV, luxury SUV. Then when you look at the top-selling EVs in China on the right there in December of 2022, you see NIO isn't anywhere to be seen. What you need to remember about NIO is that they're a luxury auto manufacturer. They're not about volume. So here you can see we've spot checked that 2020 number for the ES6 sales. And you can see that so far, at least from 2018 through 2022, they've sold 310,000 vehicles. You can see the various models here. So they have an SUV and a sedan as well. But when you consider this number, 310,000 total vehicles sold by NIO, and you compare that to what a firm like BYD is doing, BYD sold 1.8 million vehicles in 2022. The Song SUV series that you see above, they sold 478,000 units of that on its own, which well exceeds the total number of vehicles that NIO has ever sold. So you might be tempted to think, well, that's certainly putting some pressure on NIO, and maybe it is. Here you can see that NIO's electric car sales decreased by 12% in January of 2023, and they say especially significant is the 77% drop year over year in the crossover SUV segment. I'd like to believe that the strong sales of BYD's Song SUV series might be putting some pressure on NIO. However, when you go to the NIO dealership, as I did, and you go and compare that to what the salespeople at BYD are telling you, NIO is a lifestyle brand, and it's being marketed very differently than BYD's vehicles. And this is the NIO House in Shanghai. There's 10 of these. And when you walk into the mall, it's very prominently placed. There's babysitting, so it's not certainly costing them some money for this real estate. They provide babysitting services there at the mall for NIO owners. There's a coffee shop, a large social area. They have meeting rooms. And again, there's 10 of these locations across Shanghai. This is prime real estate. It costs money. And NIO is all about the messaging that they provide only the best support for their discerning customers. Again, they're a luxury vehicle. Now, luxury demands that you provide exceptional service because your sophisticating and discerning customers are only going to expect that. And you also need to spend a lot of money on R&D. So NIO is said to be the first electric vehicle manufacturer to provide in-car AI. They have this little head that sits there and swivels on the dashboard and smiles at you, and it acts similar to the voice offerings from Google and Amazon. They also have advanced driver assistance. It's not said to be as good as Tesla's, but they said it's certainly having advantages operating in China over Tesla. They have a large LiDAR unit mounted right above the rear view mirror, multiple other LiDARs, 36 sensors around the vehicle, and 13 computer vision cameras. So it's quite sophisticated, and that means they need to spend a lot of money on R&D and, of course, sales and marketing. So their gross margins, let's see, the R&D and sales and marketing aren't even gross margins. So let's just start by looking at gross margins here. You can see that they're somewhere around 10%, so they're being squeezed. That doesn't give them a lot of wiggle room when they go ahead and spend. So this is in RMB, so the numbers don't matter so much as the percentages here. A 10% gross margin, you can see that, is well eaten up by the operating expenses, which are split evenly between sales and marketing and research and development. So they don't have a lot of wiggle room, and now they're expanding into Europe, into Norway, with this same sort of concept, and it seems like that's going to detract from the battle that they're fighting in China. Now, when you look at NIO's runway, they have $5.6 billion in cash. These are USD numbers, $3.4 billion in debt. They're burning about $565 million per quarter in operating expenses. You can see on the lower left here the chart showing that their earnings are declining over time. And what you need to pay close attention to is the chart on the right here and the expanding number of shares outstanding. So based on the cash they have on hand, they have about 10 quarters left, or 2.5 years before they're going to need to either raise more debt or issue more shares. And of course, they're continuing to issue shares, as you see here every quarter, but they'll have to do that at a much bigger scale. Now, we haven't yet talked about what makes this vehicle so unique. And here you can see a battery swap station for all NIO vehicles that we visited. And on the right here, you can see 2 NIO vehicles parked. They're going to take about 40 to 50 minutes to fully charge. While if you drive your vehicle into that station there, it will swap the battery out and take about 5 minutes to do that. So that's what we're going to talk about mainly in our next presentation on NIO stock. Just to summarize a few points here, the Chinese EV market has become viciously competitive. NIO is positioned as a luxury lifestyle brand that's not cheap to operate. And 99% of EV makers didn't choose a swappable battery model. Our belief is that the swappable battery will make or break NIO. That's what we're going to talk about in the next presentation. Make sure you subscribe to the channel so that you can be notified when that new video comes out. And in the meantime, I put up another video here that you can watch on Chinese stocks. But before you watch that, please make sure to click the logo here on the right, subscribe to our channel. Thanks so much for taking the time to watch this video.